Hello and welcome to ET Now Startup Central, the first and only daily show in India dedicated to startups and entrepreneurship. I'm Krishna Kumar coming to you live from ET Now's Mumbai studios. We have a power-packed show lined up for you over the next 20 minutes. But first up, let's take a look at all that's making headlines in the world of startups. Funding action continues to dry up in the startup space. Data from the week gone by reveals that even angel investors are tightening their purse strings. A special report coming up. The Aadhaar bill was passed nearly a fortnight back, but what kind of opportunity does it throw up for startups here in India? We put that question to Sanjay Swamy of Prime Venture Partners. If you're a startup looking to cash in on the Aadhaar base, this is a must listen. On the show today, we have the man who leads the product category for one of the prominent e-commerce players in the country. We're talking about Anand Chandrasekaran, Chief Product Officer at Snapdeal. Two of India's top e-commerce players take to a slugfest on Twitter. Kunal Bell and Sachil Bansal's Twitter brawl was what was trending, and Twitterati hasn't taken it well. We get you a special report. And in our special segment, Best Advice Ever, we tell you the best advice that Oyo Rooms founder Ritesh Agarwal has to give that you can learn from. Straight up, it's time for our weekly funding meter, and we have Arun Natarajan from Venture Intelligence with us to give us a 360-degree perspective of all the funding action in the week gone by. Arun, good to have you on the show again. Tell us, last week easily looks like one of the best weeks in terms of funding this year. Take us through some of the key deals and the money that were pumped in.
Sure. So, it's kind of very interesting that last week we had the biggest, in terms of dollar terms, $229 million getting invested across 7 venture capital investments. And this is coming just after the week where we've seen the lowest period. The previous week had just seen 6 transactions worth just $9 million. Obviously, the contributing to this is the biggest of the transaction was Big Basket raising $150 million third round, led by Middle East-based Abraj Group, with participation from newer investors like IFC and Sands Capital. And then we had Sofina, a Belgium-based investor, investing $70 million along with existing investor Sequoia into Byju's classes, which is an app-based tutoring as well as test preparation company. So thanks to these 2 transactions, as well as Mr. Nandan Nilekani, co-founder of Infosys, he had invested into a mechanical engineering company, SediMac, $7.5 million round, along with the existing investor Nexus. So all of these have contributed to making this week the biggest, at least in value terms, for the current quarter and the year.
Arun, that sounds like a really good week for startups as far as funding is concerned. But my question is this positive swing sustainable? Considering it came after a really poor week of funding before that.
Sure, we probably have to look at this in the early stage segment and the growth stage separately. The early stage, despite all the international, kind of nervousness, has been chugging along quite fine, especially the angel segments. We are seeing consistently, including the latest week, at least 10, angel investments going through and 3 to 4 seed kind of capital investments going through. So that is probably expected to continue. The volatility that you talked about is essentially coming from the growth stage, and that to the dollars that get contributed. And that the selectivity of the investors, in deciding which of the companies they funded earlier will go on to raise the Series C and Series D kind of investments. And good examples, we have seen these two, whether it is Big Basket or Byju's, where the unit economics and the scalability proposition are not in question. You are getting a lot of international investors happy to do these 3rd and 4th rounds. So that is a bit of a question mark. The growth capital, will that come back? And we probably set to see the kind of volatility. Early stage seems, at least so far, quite fine and steady.
Arun, let's talk, the investor mix over here. Tell us, how is that changing? We saw hedge funds dominate the scene last year. What is happening at this point in time?
Correct, very much. So we looked at, the first half of the year, which is the fiscal one, April to September, and then, the October to now this month, March. where there has been a substantial amount of nervousness. The first 6 months, of course, was heady days with all kinds of investors, hedge funds, Russian funds, and whatnot rushing into startups in India, and very much on the topic of hedge funds as well as hedge funds linked investors. Tiger Global, of course, being the best known of them. They've slowed down as much as 76%. So Tiger Global, for example, did 18 investments in the first 6 months and just 5 in the last 6 months. Similarly, other names which followed the Tiger into India, SteadView Capital and others, pretty much in the second 6 months they are not even visible at all. If you take other segments that have slowed down, the corporate VCs or strategic investors, interestingly, have slowed down as much as 44%, and these are names like Qualcomm Ventures, Nokia Growth Partners, who were quite brisk in the first half, have slowed down quite significantly. On the other end of the spectrum, the family office segment, led by obvious names that we've been talking about in recent weeks, family offices of Mr. Ratan Tata, the Infosys co-founders, Mr. Ronnie Screwvala of Unilaser Ventures, they've significantly stepped up activity. That category as a whole is up 38%, and they were actually quite active in the first 6 months as well. So, if you look at the mainstay, the big segment, which is the traditional financial capital, we are seeing some interesting trends there as well. For example, the India dedicated funds, your Sequoia India, Axel India, for some reason they have kind of decelerated more than the foreign funds who really don't have to deploy their capital only in India. So interestingly, names like Japanese funds, BNOS Partners, M&S Partners, they've really stepped on the accelerator and invested more in the latest 6 months compared to the previous 6. So from an entrepreneur perspective, there is clear rotation in terms of which pockets they could tap. Whether this will sustain going forward, we'll have to wait and see.
We'll have to wait and see. I'm afraid, Arun, we'll have to let it go at that. But all said and done, it's the best week in 2016 as far as funding for startups is concerned. Arun Natarajan of Venture Intelligence, thank you so much for taking time out to be with us here on ET Now Startup Central. Away from that and on to the other big story that we're tracking over here. The Aadhaar bill was passed nearly a fortnight back, but what kind of opportunity does it throw up for startups here in India? We put that question to Sanjay Swamy of Prime Venture Partners, who was also part of that core UIDAI team with Nandan Nilekani. If you're a startup looking to cash in on the Aadhaar user base, this is a must listen. Take a look.
In the past, it was very difficult to verify if the information given was accurate. Aadhaar is basically saying you're still sharing the same amount of information, but at the click of a button, I can verify if this information is valid or not. Right? And because it is signed, digitally signed by the government, and it is now passed as a law, there is no way for somebody to dispute whether they actually shared that information or not, right? So, or whether they were present at that location or not. That is what this does. People can now deliver services at a much lower cost, and therefore can include more people in the system. Right? So that is really the foundation of what Aadhaar does, and in fact the name Aadhaar stands for foundation. Right? So now that we have this incredible infrastructure virtually available to the entire country and can be verified instantaneously in real time, what are the opportunities that one can use where one can leverage this, right? And that will create a variety of ecosystem players, right? There are opportunities in the government, and we've already seen direct benefit transfer, and we're going to see much more of that. But several other opportunities as well that will make the government far more efficient.
Are there already startups leveraging the opportunity currently?
Yes. So actually, what we are seeing in the first phase is several startups in 3 areas. One is at the technology infrastructure level, right? So companies that say, I'm going to make better biometric sensors, I'm going to make lower cost biometric sensors, I'm going to make cell phones with built-in biometric sensors. So there's one level of technology. Then you have companies that are saying, I'm going to offer this as a service, right? And then there are companies that are building applications, right? Which could be, we have seen one startup that is still in stealth mode, so I won't name them, that is saying, I'm going to do some sort of personal loan, right?
And in terms of regulation, is everything else in place? Because especially in fintech, the RBI also seems very enthusiastic about this. So in that sense, will fintech see more opportunity?
I think fintech and whether it's banking or whether it is investments with SEBI, I think that's where we are likely to see the initial use cases. But there is nothing that prevents this from doing other use cases.
And how enthusiastic are investors to put money into this space? You know, startups that look at Aadhaar, that look at incorporating, the jam trinity, so to speak. Is there a lot of investor interest at this point?
So I think the investor interest will be in applications of Aadhaar, right? So there will be certainly opportunities at the infrastructure. Like I said, somebody might come up with a breakthrough device or sensors with the foundation level services as well, kind of like a payment gateway. Like an Aadhaar gateway, for example, or an authentication gateway. Those will be there, but the big opportunities will be in a variety of services.
From one big voice to another, we have the man who leads the product strategy for one of the most prominent e-commerce players in the country. We're talking about Anand Chandrasekaran, Chief Product Officer at Snapdeal. In a freewheeling chat with ET Now's Rahul Dayama, he says that marketplace, logistics and payments will be the biggest focus areas for the company. He also opened up on battling competition and his checklist for investing in startups. Listen in.
We have three major focus areas. One is, we have an open marketplace, both on the buyer side as well as seller side. So we focus a lot on building absolute best-in-breed, world-class sort of consumer experience, and also having a really, really successful onboarding and ongoing experience for sellers. And by doing those two successfully, we have a really functional marketplace. The second thing that we focus on is logistics. So being an open marketplace, we have to have technology drive how our logistics are automated. So recently we launched a machine learning based promise for packages so that, we can actually sort of reduce the promise a lot more. And then, to reduce the anxiety for consumers, we actually place the widget right on the home screen so that anytime the status of an order changes, you see that pop up on the home screen. The third is actually payments. So we've been doing a lot of stuff in the payments area.
With free charge?
With free charge as a focus area. So really, to summarize, it's the marketplace, it's logistics, and it's payments.
Also, mobile you mentioned, it's driving traffic for many, many users. But any updated numbers in terms of how much is your mobile traffic, the mobile website and the app for us to get a sense, because Flipkart and Myntra have backtracked on their mobile app-only strategy. So as far as Snapdeal is concerned, what's the numbers that you can share?
Yeah, so for us, while we try to have a best-in-class experience across all form factors, I think there's no, it's no news that, mobile is sort of the primary medium to connect to the internet. So about 70% of our orders come from mobile platforms, mobile web plus mobile app, and about 30% come from our desktop platforms also. Some of our customers, like, if they're buying a very expensive item, they sometimes use a bigger screen, better images, etc. But about roughly 3/4 of our orders come from mobile today.
Also, in terms of categories, mobile and fashion are the largest selling. But apart from that, which categories will stand out in the year to come? Because we're talking about furniture where the margins are better, and even otherwise, you're also planning to get into the entire air travel ticketing space. So which are the categories that will be a focused thrust area?
So I think this, we're constantly evolving in terms of which categories are very popular. In the last few months, fashion absolutely continues to be a kind of a recurring area. A lot of people, the number of fashion items they buy is not deterministic, so they come back and buy more. We also feel like, we've put in a lot of effort into FMCG products. So we have a new buying experience on our Android app, which is, if I'm buying an FMCG app, I don't need a lot of photos with multiple angles, etc., etc. I just want to kind of pick and go. So we have a very simple sort of purpose-built experience for FMCG. So we're seeing a lot of traction in FMCG. Also, we're seeing a lot of traction in general merchandise, even sporting goods, etc., etc. So those are probably the categories that are new categories in our platform that are doing very, very.
On to the Twitter spat between India's two of the most valuable e-commerce players. One of them who just featured on the show, which got ugly last week when Sachin Bansal mocked Snapdeal by saying that Alibaba's investment hadn't fared well. Now, Kunal Bell hit back by reminding Bansal about Morgan Stanley downgrading Flipkart's valuation and asking him to focus on their business. While this is not the first time that entrepreneurs have taken their rivalry to public forums, Twitterati reacted to the spat, with many mocking the two for wasting time rather than bracing themselves to take on the global e-commerce giant. Here are some very interesting tweets. You guys are behaving like America and Russia. That is one of the tweets, how Twitterati reacted to this brawl between Sachin Bansal and Kunal Bahl. Sachin Bansal seems like someone who's rattled to see the big daddy entry in the market. Hope Alibaba's entry will push you to improve your service. That's another tweet coming in. There you go. You know, Microsoft, Samsung, LG all make fun of Apple, but Apple just focuses on what it does best. That's another interesting viewpoint coming in. There you go. One more. Both of them are hashtag India representative. Better not to fight and focus more on competition with international players. Here's another one. Flipkart and Snapdeal CEOs will be better off figuring out how to tackle Alibaba when it enters India rather than sparring with each other over here. On to our special segment for the day. We have one of the youngest entrepreneurs and the man behind India's largest budget aggregator, room aggregator, Oyo Rooms. Listen in as Ritesh Agarwal, founder of Oyo, talks about the best advice that helped him in his journey as an entrepreneur.
I think one of the best advices I have received has been, I think it's not an advice, but it's more of a quote which says, stay hungry and stay foolish. I think that helps me a lot. And again, I think this is something that many entrepreneurs will relate to.
All right, that stay hungry, stay foolish is also Chandra's email sign off on her favorite book as well in recent times. Unfortunately, she's not here today, but she will be joining us tomorrow. But stay hungry, stay foolish is certainly one of the best advices that anybody can get ever. On that note, let's move on to the number crunch of the day. And the number we're crunching today is 228.5. If you're wondering, well, there's no wondering. Here you see on the screens, there is a reason why we picked that number today, because that number belongs to none other than King Kohli, and that is Virat Kohli's averages in terms of run chases in World T20s, 228.50. It's quite a certainty that he has remained not out on innumerable occasions, and that's the reason why 228.50 is King Kohli's average in run chases in international 2020 tournaments. You cannot keep that man out of the mind space of Indians watching any kind of television for the day after the kind of match I was witnessed yesterday. Comparisons with Sachin's are abound. Forget comparisons. There are talks about how he is set to surpass Sachin, who is currently the god of cricket. May God bless him, and he is wishing him all the best in helping India win this 2020 World Cup. But on that note, we have to wrap things up here on 80 Now Startup Central. Thank you so much for watching, but don't go anywhere. Keep watching 80 Now. Coming up next is Market Watch.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.